If you think about digital transformation, which is the business we're in at ServiceNow, it will grow 8 times faster than the economy. So this is one of those very special marketplaces, and we're very optimistic about 2023.
So no recession for IT spending?
Not a chance.
What about in general for the consumer? You're not seeing companies pull back?
The consumer is obviously under a lot of stress. You know, if you go down in the value chain, especially if you look at retail as an industry, everything is value for money. From the person that's driving an Uber all the way up to the CEO that's running a bank. It's value for money. And everybody has to optimize the real solution and the real impact to the consumer. But I do believe that I am slightly more optimistic than most people.
Some of the tech executives have been, which surprises me because that's the area where we've seen belt tightening, layoffs. I mean, one of your competitors, Salesforce, recently announcing layoffs. Is that something that you're doing?
We're hiring. And we're hiring, Sarah, because if you think about ServiceNow, it's uniquely differentiated. We have become the platform for end-to-end digital transformation. So it's not just about running IT well, it's about the employee experience, how you service your customer, and how you build new applications on a modern low-code platform to innovate and change the world.
So what is happening then in the broader cloud industry? Is it just a give back from over-earning and overcapacity during the COVID boom?
You have to run a great company. And I think a lot of companies just were staffing up on the prospect that growth would continue and that would be a new paradigm that went on endlessly. We took a little bit more of an intentional approach because we're growing through organic innovation, meaning we prefer engineers that actually build the software on our platform, and we prefer our own go-to-market professionals that team up with our partners to grow a great business. And we were intentional then, and we're intentional now, but we are hiring. In fact, we added about 12,000 people to the payroll through COVID, and every one of them is gainfully employed.
So you're hiring all those people that are being laid off at other tech firms?
No, actually, we continue to hire the best, and we don't source from other companies. We don't have to. We're actually admitting 1% of the actual people we interview. That's not counting all the resumes that we get and the people that are interested in being in ServiceNow. So the best people want to work for the best companies that have the best competitive differentiation and a culture that was born to win.
The stock is down more than 20% or so over the last year. It's underperformed the broader market. What is Wall Street missing?
Well, there isn't a tech company that I'm aware of that has outpaced the S&P 500 in this particular downturn because there's been a move away from growth. Yeah. So growth stocks had their multiples compressed. We're no exception to that, but our multiples are still the highest in the industry because our growth is the fastest. Sarah, we're actually growing near the rule of 60, and I'm unaware of another enterprise company in the software business doing that.
So you've seen a number of cycles, especially as the leader of SAP. What does this one remind you of?
Oh, this one is, it's nothing like 2008, and it's not even anything like the dot-com bubble bust. This is actually a moment in time where they're doing what I call a great reprioritization, where customers are sitting down and they're strategizing and they're saying, what are the platforms that matter? Because we're not going to invest in something that is not a platform that matters. So when things were going great, people would have 2, 3, or 4 of similar things. Now they're saying, I want the one winner in a category, and everything else is going to lose. Right. And that's what's happening, the great reprioritization.
What about you and your own investing? How are you feeling about acquisitions? Because valuations have really come down in the cloud sector.
They have, Sarah, but our strategy has been clear from the beginning. We're growing organically. And if we do something, it's been of a tuck-in nature. We recoded immediately to the Now platform because we never will pass tech debt onto our customer. So our strategy is different. We like to think that we're playing chess and other people are playing checkers.
So what does that mean for deals you're holding?
We're not interested in deals, because we don't need them. I mean, that's the big thing.